The entire Indian market is holding its breath right now. The only question that matters, will RBI governor drop the rate cut bomb or not? Just 10 days ago, I was 90% sure of a cut. Today, it's a pure coin toss, 55% for the cut and 45% for the pause. And how we went from a total certainty to a nail-biting drama in 1 week is the best macroeconomic lesson you will ever get. So whether you are a first-year college student or a grizzled stock market veteran, stay logged in. This one is pure central bank chess. So let's dive in. Let's start with the headline that fooled everyone, from Reddit to the news anchors. India just clocked a massive 8.2% GDP growth for the July to September quarter, the fastest in 6 quarters. Sensex hits all-time high. Twitter screams superpower 2047 is confirmed. But here is the dirty little secret they don't talk about in the boardrooms. That 8.2% growth is lopsided as hell. Almost 3 full percentage points came from one single source, the government. Defense contracts, free food schemes, those massive infra bills, the government was basically force-feeding glucose to the economy. What about you and me? Private spending grew at the slowest pace outside the COVID lockdowns. Factories, not so much. Bottom line. So the economy isn't dying. It's just on government drip. If you remove the government's 1.1% point boost, the underlying growth of 7.1% was actually below market expectations. What does a rate cut actually do in your life? Imagine it's 45 degrees Celsius in Delhi and you have to walk 5 kilometers. The smart move is to drink a little extra water right now so that you don't collapse halfway through. Rate cut is that extra water. RBI makes money super cheap today, so your home, your car, your factory, your startup all get funded before the real heat hits. Cheaper EMIs, more construction jobs, more businesses, simple, powerful. So mathematically, low inflation plus sluggish private spending is equal to that formula normally screams, cut now, RBI. That's why 2 weeks back, the market was pricing almost a 100% chance of a 25 basis point cut this Thursday. Then, 2 things happened that blew up the script. First, the lopsided 8.2% print removed the panic button. The underlying growth, once you remove the government boost, was actually 7.1%, lower than the 7.3% consensus. And second, and this is the big one, the global trade war whisper is back. Think Trump 2.0 shouting about 10 to 20% tariffs on the world. A major trade war in 2026 would roast our exporters. Suddenly, Governor Malhotra is sitting there kicking at maybe 6 to 8 small rate cuts left in his pocket before Indian rates hit rock bottom. Every 25 basis points is a real bullet. Once you fire it, you just can't pick it up and reload. The entire market calls it limited ammunition. Do you fire a life-saving bullet today when the economy is merely jogging? Or do you save it for when the real 2026 trade war bullet comes screaming at us? But the RBI also has a magical Red Bull vending machine in the basement called liquidity. Here is the genius play the smart money is betting on. Twist the liquidity knob wide open. 1 to 1.5 lakh crores floods into the banking system overnight. Overnight, bank rates crash from 6.5% to maybe 5.8% by Friday. Every floating home loan, car loan, and factory loan feels cheaper the next month. Builders break ground, factories add shifts, the stock market gets a super high. The economy gets the exact same kick as a real rate cut, but 0 bullets spent, 0 commitment. Close the tap next month, and poof, no hangover. That is why Thursday is shaping up to be peak central bank chess. Massive Red Bull party, while the actual rate cut bullet stays dry and shiny in the magazine. My personal call? I'm going for a dovish pause. No rate cut, but a monster liquidity injection. A lower inflation forecast, a slightly higher GDP forecast, and a big friendly wink from the governor that says, February is very much alive if the global storm passes. Either way, Thursday is going to be fireworks. And for the stock market, that means we get cautious trading today, but expect a big relief rally on Thursday afternoon, led by banks and real estate, because the liquidity infusion is the profit booster that they really wanted. So are you betting on a cut or a pause? Drop your view in the comments right now. If this 6-minute macro class made things click for you, smash that like button and subscribe. I will see you in the next one.